Well, hello friends. Today there are three important signals in the market at once. And today we'll break down with you what's happening in the main crypto market news and how these events will affect the movement of the crypto market in the future. As you can see, Bitcoin's successful climb to its highs has stalled. We're stuck at the 68,500 mark. Neither lower nor higher, still at the same level. We're staying where we were a few days ago, just like before, a detailed review of Bitcoin. I did a detailed review a few days ago on the channel. You can check it out. Now, I'd like to talk about the main important events that have become known. And these can really give us a strong hint about what major investors are preparing for and what they're doing right now. Are they taking profits? Are they exiting assets? Or on the contrary, are they entering assets, buying them? And based on the analysis of this news, we'll be able to make our own forecast. So I'd like to start with the following news. Let's start with the Fed. Christopher Waller, he is a member of the Board of Governors and one of the main voices on monetary policy. He was even considered for the position of chairman. So he recently stated that the euphoria in the crypto market after Trump's victory is gradually fading. Bitcoin has pulled back from its 2025 highs to 60 to 70,000, and that's normal. In other words, he's saying it's absolutely normal that you can make money or you can lose it. Basically, he didn't tell us anything new. But here's something interesting too. Here is another point that he made during his interview, which we can certainly all learn from. From what he wrote not so long ago. So he mentioned the idea of a simplified master account. That is, a simplified master account. This is a kind of partial access to the Fed's payment system for fintechs and crypto projects. No interest on balances, no discount window for loans. Basic access to US liquidity. In other words, a full-fledged law on crypto infrastructure is stalling in Congress. They still can't pass it despite steps like the Genius Act on stablecoins. So this uncertainty remains. Nevertheless, there are some steps being taken now. That is, some half measures. Half measures as if we want to give access to the Fed's payment system. But at the same time, a full-fledged crypto infrastructure still hasn't materialized, and most likely it won't happen in the near future. This means that we shouldn't expect any rapid breakthroughs in cryptocurrency regulation right now. So let's draw a conclusion, namely that the market will continue to experience some turbulence for a while, will be nervous, and will make rather sharp moves up and down. So you need to be prepared for that. That's what concerns the long-term strategic plans of the US regarding cryptocurrency regulation. Let's move on to the next news item. This is probably the hottest news right now. Tether Treasury has burned 3.5 billion USDT. Why is this the hottest news? Because it's 50% more than the major USDT burns of this kind in 2022. Overall, this is probably one of the largest USDT burns in history. Let's put it this way, what does this actually mean in simple terms? What does this mean? It means that big players, exchanges, and funds are buying up USDT for real dollars. In other words, they want to convert their USDT into real dollars and cash out. That's what's happening right now. So Tether is destroying tokens to make sure the supply doesn't exceed the reserves. So the dollars aren't disappearing, they're just moving from crypto into fiat. And the reason this is drawing attention is because it's a very large amount in a short period of time. So once again, why is this concerning right now? Why is this seen as a rather serious negative signal for the future, not just for the crypto market actually, but mainly that's what we're talking about here, since it's about USDT, after all. First of all, it removes liquidity when there's already not much of it. Instead of being able to invest those 3.5 USDT into Bitcoin, Ethereum, or something else, people are withdrawing this liquidity from the market. And accordingly, this factor is quite alarming. Secondly, it's a signal of capital outflow. In other words, there are fewer dollars available to buy during dips. Large funds are not buying during the dip. In previous stressful periods, such USDT burnings coincided with cascading liquidations. The market, of course, has become stronger, but the weakness is still visible. That's why this point deserves attention. At the same time, we are seeing another interesting picture emerge. So as we discussed, a fairly large amount of USDT was burned. Nevertheless, at the same time, another interesting piece of news has come out. Overall, if we look at the general picture of stablecoins, it's not all that negative. In other words, the total capitalization has exceeded $310 billion. This is a new high at the beginning of 2026, despite downturns in crypto. USDT and USDC still dominate, accounting for up to 85% of all stablecoins. USDE, DAI, and even new stablecoins like USD1 from World Liberty Financial are also growing. What does this mean? It means that stablecoins are moving away from being just a business-to-business payments layer to real business-to-business payments, including decentralized finance. That is, decentralized finance. According to forecasts, we expect up to 2 trillion stablecoins by 2028, if regulators don't slow this down, of course. So the contrast with this USDT burning shows a redistribution, not a collapse, because after all, the total capitalization of all stablecoins is quite significant. And yes, the USDT burning was quite significant, but again, given that we have a new all-time high in capitalization, we can say that yes, someone apparently withdrew a large sum of money, but again, we can't say right now that this is some kind of serious negative signal indicating an impending collapse. Rather, I would probably interpret this as overall, the market will continue to remain nervous. That's how I would put it. Globally, if we look, both the S&P 500 and the nasdaq index rose yesterday. There was profit-taking, mainly among tech companies and those focused on artificial intelligence. They are leading. Bond yields are stable. The probability of rate cuts is increasing gradually. As for gold, gold is also trading around the 5,100 level. Silver is also roughly at previous levels. Oil is rising to around $70 amid geopolitical risks. If we look at cryptocurrency inflows into ETFs, we see that Bitcoin has an inflow of about $146 million. The main buyer is Grayscale. BlackRock is neutral. Ethereum is also growing by 57 million, despite outflows from BlackRock. So without BlackRock, the overall flows into Bitcoin ETFs would be negative. So overall, cryptocurrency is syncing up quite well with macro data. And we can see there's been some slight recovery after the drop. However, we can't say right now that there's any impending market collapse. So that's it. This was a brief summary of the main news for now. If you liked this video format, please give it a like. Let me know in the comments which news topics you'd like me to cover, including any specific ones. Subscribe to my Telegram channel. There you'll find news, charts, and live streams. We do them together. If you want to understand cryptocurrency in more depth, join the free lesson. Have a great day, everyone. Bye-bye.